Hey, John from York Bay Financial Partners, looking at investment markets. Still some pretty strong data coming out of the US. Latest retail sales showed a pretty hot economy still. Expected a reading of plus 0.3, came out at plus 0.7. Now that follows on the back of the inflation data that came out towards the end of last week, with PPI and CPI just up slightly on a sort of month on month and year on year. But again, when you got down to the core figures, they were pretty much in line. CPI came in at 4.1, which was expected year on year increase. And quite interesting looking at the Fed minutes as well. They were sort of coming out and, the same sort of rhetoric that, if inflation does sort of show signs of increasing, then potentially rates may have to increase. But certainly inflation is on a downward path. The only sort of sticky point at present has been sort of shelter costs, rents, etc., but also as well, obviously, energy. But now it does appear to be the case that more and more Fed officials are coming out and sort of making comments along the lines that rates are where they need to be, and potentially the next move is now down. Although interesting, after that hotter than expected retail sales number, rates have nosed up in the US. 10-year is now 484 and the 2-year is 521. But we're now into earnings season as well, and a pretty big week for earnings this week. Among the heavyweights are Tesla and Netflix. Goldman's have already reported, and they were at the upper end and beat sort of estimates, and that follows on the back of JP Morgan at the end of last week as well, beating estimates on their reporting. So as sort of discussed here before, the US economy is in pretty reasonable shape. It is robust despite the rate increases, and inflation does appear to be on a downward path. Obviously, the other major issues are the sort of conflicts. You've got the Russian-Ukraine war, but also as well, obviously, you've got the events in Israel and Palestine. Now on that, President Biden is expected to fly to Israel to try and sort of step up the potential sort of negotiations and sort of try to calm tensions out there. Putin still seems intent on trying to sort of taunt the West as much as possible. He's made a trip to Kyrgyzstan, which is a strong ally of Russia, and there's no possible case of that arrest warrant being implemented there. Also talk as well about a trip to China to further strengthen those relations between China and Russia. And while you've got these sort of international disputes all the time, you've got the US without a House Speaker, and that process is not going too well at present. Now, oil has spiked up a little bit here, currently around sort of 87.50 and change, but nowhere near the sort of big spike that people were anticipating. A little bit of better news coming out of the UK. There was the latest GDP figures actually showed a small increase, only plus 0.2, but that was certainly better than the July readings. And again, with inflation falling in the UK, potentially, has the sort of economy sort of bottomed out and now starting to show a few sort of signs of tentative growth out there. Now, in the EU bloc, potentially a little bit of a sticking point on its sort of support for Ukraine. The recent elections in Poland did not bode well for further support going to Ukraine. And certainly there is a feeling within the EU bloc now that, support, although while they sort of condemn the sort of actions of Russia, support is starting to wane out there. After all, we're sort of 18 months into the conflict, no real signs of it ending, and you just can't keep sort of supplying support financially or with sort of equipment on a monthly basis. Now in Australia, the latest minutes out of the RBA, potentially imply that rates are on hold unless inflation does sort of show some major signs of sort of increasing. Given their cash rate is only 4.1, that's a pretty major achievement. When you look at where other global central banks have had to put interest rates up to. And also as well, obviously with tentative signs as well coming out of China that their economy is starting to sort of recover and show some signs of some reasonable signs of growth out there. That should be pretty good for the Australian economy in terms of sort of the resources and minerals that will be required. Now here in New Zealand, obviously the big news was the election, a pretty landslide victory for National and ACT. Looks like they should be able to govern alone, getting over that sort of 61 seat required. Although still waiting for the special votes, which is around 500,000 votes to come through. And quite ironic as well, a little bit of good news on the CPI data as well. That was actually down more than expected. Came in at 1.8 for the sort of September quarter and 5.6 year on year. Now, significantly, that is much lower than the Reserve Bank had sort of anticipated at its last August meeting. So potentially now as Reserve Bank, is it on hold? There was some talk about a potential rate increase in November, but that looks to be off the table now after the back of that CPI data. And if that is the case, then talk will now start to move to potential sort of rate cuts in the sort of, maybe the first half of 2024. Because certainly inflation is falling. Now net migration is still pretty strong. For the last 12 months, 110,000 net migration numbers. Now that's 225,000 in and 115,000 out. So now just really waiting to see what the sort of summer months brings in terms of sort of tourist numbers and spending. But at present the New Zealand economy doesn't look in too bad a shape. So really just waiting for early November now for those special votes to be counted before the next government can formally be announced. But at present, I say it looks like National and ACT will have enough sort of votes and seats to get that 61 seat majority required. Now, if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.